Wednesday, July 10th. A little bit different format today, still starting out with the indexes, but we have a situation where I need to point out some RSI levels. Then we'll go to the other commodities. So on my first chart in the indexes, it's the E-mini continuation chart. This is plotting the September futures contract at this point. I've got the data squished left to right fairly tightly to show you approximately 2.5 years of historical daily data. But I really want you to pay attention to the relative strength index, which is at the now full screen. Our current RSI levels have reached 87.15, where it is actually right now. And I would think that would be about high and last for the rally. Yep, pretty much up 34, 35 almost. Once we are in this very high 80s, especially at 90 or higher, if we can get there, levels on the daily RSI, this is my custom RSI, then we stand a very, very high probability of turning down. Now, how long? How much? Depends on a variety of other situations. We're in all-time new historic highs, so you can't really do anything but Fibonacci extensions or measured moves or something along those lines. But I use RSI. I've been using it for decades. And when I see an 87, especially a 90, and I put an extra line on the daily data charts and the indexes today to show you when we get extremely close, the bar has turned red. The RSI marker, or bar in my case, showing you there's a bearish engulfing. That doesn't mean the market topped out. It means it tried to. And because the RSI goes down a lot right here, it does mean that we topped out. And I'm going to pull it back to a subgraph that's a lot smaller. And that would be this date right here. Now, it did make a slightly higher high and then have a correction. And we don't have anything but two large corrections, significant ones, lasting several weeks or more in the last whole year, period. Maybe we're due for another. I think we might be, should be, and could be. And I think it's coming up real soon. 35 higher at the moment on the E-mini. Now, the last time we got very, very close to 90 on the RSI was this date, June 21st, which was a bearish engulfing, and two more occurred, but we did not get much more than a simple sideways to a little bit lower trading range before it exploded in the last week or so. But I want you to look at the very high levels coming very close to 90, the red dash line, this one here, and it topped out for about a week. True, 2020 hindsight, didn't change the trend, didn't do anything but have a short-term minor downside correction. We didn't even get that close to 90 when the next July 27th high occurred. And then you started a downside correction all the way into October 27th, the October lows. Now, this is July 10th, a little earlier than July 27th. I don't mean to say it's going to be July. It's usually August, in particular September, but can and has been July. Here we are. Super overbought. Here we are. New historical highs. Extreme strength. 6 days, 5 of which have had closes higher than the open. And I think 6 days in a row we've had higher highs. All of them historic. Can't do this forever. I think we're super close. Maybe this week. I'm going to say probably this week. We're going to have a bearish engulfing, or at least a top of some sort to turn down. But I think it's very soon. Now, what about way back here where we got up to about 86 on a fraction? That was a major top that occurred, and it went down. Guess what? From August and a half, August 16th, all the way into the October lows, which was October 13th of 22, which I pegged in my YouTube videos in advance to the day when it happened. And it's the beginning of this bull market to the day. Also, it was the end of the previous bear market, which lasted about a year, a little less. Now, my point is, watch out. Don't get enthusiastic about the thing that's going to the moon. It's never going to stop. It left me behind. I got to get in before it's too late. And anything else you can come up with that sounds like that, it's classic bad thinking. I know it's frustrating not to be long in a strong move like this, but I'm patient. Been at this over half a century, so learned a few lessons. Next chart, E-mini, 1 minute, just screaming here like it should be, like the daily chart looks like it should be. Real strong, real fast, going up very quickly. Prelude to a top. Next, Spider. Overbought, 86.75. Each time it's gotten close to or above 90, it has turned down almost to the day. No changes in opinion or comments. Now, I will say, going back to the E-mini real quick, that the minimum downside objective on the E-mini is probably going to be not just back to the trading range we had a week or so ago, 55.93 or so, but I think definitely, or I think probably, can't say that in the same sentence, 54.07 is highly likely. And I wouldn't put it past the market to get down to as low as the low 5,000s, 5,015, or even lower. The ultimate in October, 48, well, let's say 4,900 or a little under. That's the ultimate. Now, that's a big, big move down. And I'm not going to be surprised if we get something like that. In order to have that happen, there's probably going to be something big time political the market doesn't like, regardless, who, or because of that, economics. I don't know. I'm not a fundamentalist. Next, Qs. Extremely strong. Momentarily high last. RSI 86. Got to say the same things. Downside objective 450 or under. Next, Qs 1 minute. Yep. And as you would expect, looking very strong last several days. Next, NASDAQ futures daily, September. And let's push this to the far right. New highs, just screaming. 85.71 RSI. Same statement applies. If we're not there today in terms of RSI topping out type of levels, we should be tomorrow or the next day. This marketplace is expecting some really good news from somewhere, somehow. That's what it looks like to me. NASDAQ 5-minute chart, just screaming here. And the rumors or expectations of this really extra good news started around 8:15 California time. So a lot of stocks are on the way up, like this chart, getting overbought, I'm sure. So this turn is going to be profound. Next, Dow futures, still sideways. Major formation, double top, has not broken out yet to the downside. When it does, my objective is going to be 35.69, so I'll call it 35.070. And the 1 minute. Just got above yesterday's high, but it's got a ways to go above the previous day's high. And then we've got something bullish happening, but I don't think that's about to happen. I think we're at resistance, showing topping out type of activity, locations, overbought conditions, a variety of conditions that frequently provide a turn. Okay, Russell, we don't care lately. Pass. The bonds. I'm sorry, yeah, the bonds. We've got attempt to make a new high, 4th day in a row. And just a second. Yep, that's right. And firm, but it's a doji, basically. Yesterday's high, maybe we went above it a tick or two, but not a new high for the last week or so. And it kind of stopped so far. even if it does punch through it on the upside, I think it's going to run out of gas real soon and have another downside correction. I see the possibility of this formation. I see it. Head and Shoulders are my favorites, but I'm having a little trouble justifying it yet. 10-year notes, very similar combination of situations, but I'm not justifying it yet. That's your pivot point. That's your pivot point. But it does exist, and I'm not ready to get bearish unless all of a sudden we do have a bearish engulfing and or actual sell signals in some cases. Indexes would be a lot of cases. All right, here we go to crude. Hit support. We've actually got a bullish engulfing. Oh, and you'll notice today I have turned off all my strategies. So what you are now looking at is red-green standard candlestick color coding. No strategy running on the data. There is my custom relative strength index indicator in subgraph, and it provides a lot of the information one would need to make their own personal decisions as to what to do. Yellow for overbought and oversold, red for sell signals, bearish engulfing price action, but without the strategy in code specifically, you're not going to get the color changes in the price. You're not going to get the red-green candlesticks in the price. You're not going to get the automation of the trades in ER1 scalper overnight or ER3 scalper overnight. You will get the color coding with the RSI, but nothing is going to happen on the price chart itself. That's going to be a lot of help to a lot of people, the RSI subgraph. Go to ersignals.com. Next, natural gas. Almost another new low, still sinking. I thought this didn't have much zip, pop, bang to the upside, and I think it could make a new low very, very soon. We're on our way down to at least 1.9 or a little bit below 2. That would be the minimum downside objective on the double top formation, which is working great. Next, we've got a bearish engulfing ER sell signal, by the way, just last Friday. Look at the candlestick. It does have a higher high, lower low than the previous candlestick. It has a close at the bottom of the body, which is not important to me. It's the close that is below the previous day's close that is important to me. And that is definitely the case. So there's your signal day on Friday of last week. Down Monday, down Tuesday, down again today. So far, perfect. Heating oil. Got through resistance, got overbought, and ended up with a bearish engulfing that's working great. Touched support on today's lows, and it got down to, I don't know, 31. Let's call it 30. Not oversold because I need 25. So I'm not going to get any kind of a signal or coming close to it yet. Only support level that's bouncing off of a little, no surprise. I think the bounce, if it continues to any extent, could be short-lived and not much more and make a new low soon, very soon. Okay, gold. Still sideways. Still no new highs, no new lows for only the last couple days. I have a double top that almost broke out twice, but didn't. So one could say easily that this is a big sideways trading range. 2 highs at the top, almost the same. At least 3 lows, if you want to count these 2 and these 2s, that would be 5 daily lows, almost at the exact same price. Support. We're pretty much in the middle of the dumb thing right now. Not too much to do at the moment, except scalping techniques. And my ER signals are not kicking in at this point. I'm not overbought or oversold, which I need first. Next, silver. Kind of a doji. Maybe today's high is a couple ticks above yesterday, but not much. Net change is hardly anything, up a few ticks. No lower low. Kind of a sideways. I mentioned kind of a pennant yesterday. Kind of continuing it sort of today, except for the little bit of the high of the day. I have to wait. Next is platinum. There is a head and shoulder top developing in platinum. I'm now going to put in my markers. What do we got here? Control 4. Okay, this is going to be the first one is this shoulder right here. And copy this twice because get another one. I want to move it, this one, to the head of the formation, which was an ER sell signal, the very top. You guys have seen many of these highs and lows that contain an ER red or green signal on the exact turning day. That's the reason I built the strategy. I do get turns that don't work. And to the layman, that is not necessarily true. It looks like they don't work, but if you look very closely, and the code obviously does, it calculates every minute, you do have profit potentials and a lot of those reversals that don't look like they really work. Now, if they look like they really work, there's a big move afterwards like this one, of course, on May 20th. No significant rally, came nowhere near making a new high, dropped off to new lows within just a few days every single time it turned around until finally it bottomed out on June 13th in oversold conditions. So it doesn't mean you can't make money with the signals, even though it didn't start a trend up or down, which it oftentimes does. Those are the whoppers. Those are the position trades. Those are the swing trades. Those are the overnight longer term kickers, bigger numbers, stay in the trade longer. Now, next. In platinum, closing below the neckline is your breakout. And if it happens the next day or two, I'll move this over a day or so, and it raises my minimum downside objective ever so tiny amount. Actually, it's the slope of the neckline, because if it doesn't break out and doesn't ruin the pattern, you're just going to keep doing this every day and still measure from the potential breakout level. But I think it's going to be in the next couple of days, so I'm going to use it right there. And that means, again, let's call it 805. Next, high grade. Not too much to say. Intermediate trend lasts several months, 6 months, 9 months, so you might even say longer term, up. Recently have an oversold or almost oversold, actually, not quite, low, but it looks like a potential real close call with a bullish and bearish engulfing, but not quite. Simply support, close to oversold, turned it up. Now, I'm going to pass on the commentary on copper. I don't feel good saying something that I'm not reasonably, expecting, sure of. Grains, beans, oil, meal, corn, wheat, and then we'll go to cattle and hogs. Now, I've been talking about being more and more bearish because of lower and lower lows and breakouts to the downside on a long-term basis, and that's exactly what we have had this week in particular. Beans made a new low and a new low close for umpteen months, years. Did it again yesterday, and it looks like again today, and that's what I call a confirmation of a downside breakout, plus the fact that it's a large amount. But that's ancient history. We're now oversold as of today, as of around the low of the day, as of just a little while ago. We're probably low and last right now. So it's time to start looking at points where you think it's going to turn back up for whatever reason you've got, because of the oversold condition and the sharp break that we just had. But the rally shouldn't be much more than approximately 1104, maybe up a little bit further than the beginning of the resistance. I'm going to say 1120, a little hard to tell. At the maximum, 1140. And now that would be a pretty darn good rally. But my best guess is 1104 and then right back down again. Soybean oil has stopped its rally, which is a little unexpected. We did have a breakout on a head and double bottom here during May, June, and July. It did get up, I'm going to say at least 3/4, maybe a little more, to its minimum upside objective, which was at the top of the resistance area, about 51. And now I'm thinking all over, didn't make it. Not all objectives are fulfilled, They're just a likelihood. statistical likelihood. So here we are back down to support, back to the original breakout, but I'm not even oversold, not close. And the long-term trend is down. And if this market keeps sinking for another couple of days, let's say down to around 44, I'm going to end up erasing my breakout line and I'm going to end up erasing the upside objective. But there's a chance right now that if it holds and turns up, they're okay. Next, and I'm not bullish long-term. I'm only bullish maybe up to the minimum upside objective of 51. And I'm doubting that that's going to come along because of what beans are doing. I think oil is going to do the same thing. And what's happening to meal? Meal has made new lows since May 2nd, over 2 months now. And that happened today. It dropped into a support area after a few weeks ago, bouncing off of it. This time it got down to it, through it, and is now sitting around the bottom of it. Another chunk lower will be below the support area and breaking out below that. So it didn't hold may not have held whatsoever. So far, looking very precarious. I think it just might keep on sliding. My minimum downside objective has been for a while now, 2 months, 325, because on the date of May 30th, a month and a half ago, it broke out of the double top. Okay, that's meal. I'm expecting it to go down to 325 at a minimum. Next, corn has not been able to rally at all. The original major downside breakout, long-term, 628 was the date, June 28th, and we couldn't bounce at all to speak of over a 4-day period after the breakout. And then wham, on Monday, we saw new lows by a large chunk, and then we chewed at new lows today again. Other than being oversold and substantially so, it was down to 12. That, again, remember, 10 and 90 is extremely low. And that was just Monday or a little earlier. I'm expecting this market to have a very good rally, but it's going to only be up to 426 approximately. There's a chance 443, but I'm very bearish long term. Wheat almost making another new low. Let's see. The low was actually 556 3/4 on the 26th of June. So 556 3/4. Today's low is 56 1/4. So yes, it did make a new low by a half a cent. Another new low. But wheat is trying to hold. Not oversold. It was on the first low. This low is nowhere near oversold, but the same price. You could say it's a little double bottom trying to be a bigger double bottom. That's not out of the question. I need a close above 593 to get the ball rolling to the upside, or I got nothing. Cattle. Doji, inside day. I think it's got more weakness coming. Probably went down to 180. Miss Piggy has broken my 2 previous great buy signals. The first one was right on the low, rallied a couple of days, okay. Second one created a double bottom. It never broke out of the double bottom, and it's now time to erase those upside objectives and breakout levels and measurements because we have a new low for the trend down, and it's staying in it. And it looks like Miss Piggy's probably going to stick around because it's oversold again, somewhere between 84.65 where it is right now and 83.70. Maybe bouncing back up to a minimum 86.37, and then maybe the next resistance level at 89. Next E-mini again, going to the 1-minute chart, see what it's done the last half an hour. Topped out just a little tiny bit, pulled back slightly. You guys have a great day. Watch out for the stock market indexes very soon. Thank you very much. Profitable trading to you.